Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, we saw a fairly, deep sell-off in the mid-cap end of the markets yesterday. In fact, the Nifty Smallcap index was down 5.5%. Even the mid-cap index was down 4% or thereabouts. Remember, the small-cap index is down nearly 15 to 20% from its peak. So, will the broader market pain continue? How should you be navigating this sell-off in the broader end of the markets? We'll be talking and touching base with a battery of experts to understand how one should be navigating this sell-off and volatility as well. Of course, the GIFT Nifty hinting at a mild start for the Indian market around that 22,050 mark or thereabouts. Looks like we are in for a very muted start today. Of course, it's the weekly expiry as well, so some bit of volatility can be expected as well. But of course, if you have any stock related queries, keep them coming in on our YouTube feed. We'll try and take them up with our experts on the show. And of course, we'll also be talking about lots of stocks that will be in focus, including the likes of Reliance Industries, you have Tata Motors, Yes Bank, ITC after the block deal yesterday. So a whole host of stocks will also be in focus. And of course, the all-important stress test result will be coming out tomorrow. So we will be talking about that as well. So lots lined up over the next 35 to 40 minutes. So stay tuned. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Nasdaq and S&P 500 closing lower amid weakness in tech stocks. Asian markets edge lower in early trade. The GIFT Nifty is hinting at a quiet start. Nifty loses over 1% with the index slipping below the crucial 22,000 mark in yesterday's session. The broader markets get hammered, resulting in a market cap loss of 14 lakh crore rupees in a single day. Crude prices rise, Brent rallies past that $84 a barrel mark as Ukraine strikes Russian refineries, and the crypto rally also continues with Bitcoin trading comfortably around that $73,000 a month. Reliance will acquire 13% stake in Viacom 18 from Paramount in a deal worth a little over 4,200 crore rupees. Now, the deal will see Reliance hike its stake in Viacom 18 from 57.48% to 70.49%. However, it is subject to the deal with Disney going through. Well, let's first take a look at all the cues for trade today. Of course, yesterday the Nifty ended below that 22,000 mark. It was a cut of somewhere around 330 points. But the pain, of course, was in the broader market. The Nifty Midcap index down 4.5%, small cap index down over 5%. Remember, the broader end of the markets have been witnessing sell-off for 3 straight sessions. In fact, in the last 3 sessions, the small cap index alone has shed somewhere around 10%. Okay, of course, for the year as well, the Nifty Midcap index has turned in the negative zone. As I mentioned, small cap index is down 20% from its peak. The VIX, India VIX, closed at 14.43, which was up 5.5%. Today as well, you can expect some bit of volatility given the fact that it is the weekly expiry. From the FNO, in the FNO Qs, the Nifty open interest was down 2.6%, shedding 3.26 lakh shares. The Nifty March futures trading at a premium of 105.55 versus 111 point premium, and the Nifty Bank open interest was down 1.3%, shedding 26,250 shares. If you look at the Nifty put call ratio, that's at 0.65, sharply lower vis-a-vis 0.95. And if you look at the stocks that are in the FNO ban, Aditya Birla Fashion, Hind Copper, Manappuram, Nalco, Piramal Enterprises, SAIL, Tata Chemicals, Z, all these continue to be in the FNO ban. The stock that's out of FNO ban is Mahanagar Gas, and one stock that is a new entrant in the FNO ban is RBL Bank. If you look at the fund flows, foreign outflows continue. FIIs have pulled out shares worth 4,595 crore rupees. But if you exclude the ITC block deal, the figure is far higher. But domestic investors have remained net buyers, and they've bought shares worth 9,000 crore rupees in the cash market. But let's touch base with a technical expert on the show and figure out what are the levels that one should be watching out for in today's session. Joining me is Chandan Taparia, who's the Senior VP Head Derivatives and Technical Research at Motilal Oswal. Great to have you on the show, Chandan. Yesterday we broke below that 22,000 mark, very crucial support zone, right? But what is the next level on the downside that you'll be watching out for? I was just reading somewhere 21,860 seems to be another or the next crucial level to watch out for. What are your thoughts on the charts? What levels are you spotting?
Yeah, thank you, Nandita. Thanks for having me. So we witnessed a profit booking decline on last trading session, and Nifty corrected by around 500-600 points from recent highs, but closed with losses of around 340 points. Technically, it formed a bearish candle, but the good part is still we have a major support which comes at 21,830 marks, which already you mentioned, and that is your 50-day exponential moving average, and also the 50% retracement of the entire move, which is started from 21,137 to all the way to lifetime high of 22,526. So 21,830 could act as a key level for the entire market setup. If Nifty manages to hold that level, then again some sort of recovery could be placed. But if that level is broken, then we need to worry for 21,520 and something on downside. But as of now, I believe that already we witnessed good profit booking from higher levels. Nifty has not fallen much. Bank Nifty was resilience, but major panic was seen in Nifty, small cap and the mid cap. So in Nifty, we need to focus at 21,830 as a key level. And if bounce happens, that will be kept till 22,222. So I'll play the range between 21,830 to 22,222 in the Nifty index.
All right, that's a range to watch out for on the Nifty. But on the Nifty Bank Index, yesterday we saw private banks trying to offer some support to the index, right? The likes of ICICI Bank, HDFC Bank managed to just about, end in the green. So on the Nifty Bank Index, do you expect some bit of buying to come in at these levels?
Yeah, so Bank Nifty was comparatively resilient. However, it corrected when your broader index is falling down. But comparatively, it is not fallen much, is still holding well above its 50-day exponential moving average. We are forming low rise, low lows, but multiple supports for Bank Index comes at 46,666 to 46,500 zone. So I think that level could provide some sort of stability. But yes, upside is kept. 47,250 is the hurdle. So 46,500 to 47,250 is the probable range for Bank Nifty Index. And the good part is that in Bank Nifty, we like ICICI Bank, which is holding the key support zone and has potential to witness some sort of recovery in this market as well.
Right, I want to quickly get in your thoughts on Reliance Industries. Of course, the stock is in news given the fact that it will be acquiring a 13% stake in Viacom 18 from Paramount, right? And if you look at the stock of Reliance, it has been fairly resilient, right? On a YTD basis, it has given double-digit returns. So do you expect some bit of upside coming in today's session? Perhaps Reliance could be that one stock that could provide support to the index on the upside?
Yeah, so like Reliance witnessed some profit booking decline and has been making lower highs, lower lows, but major structure has not changed. Multiple supports are visible at 2800 zone. So in this decline, if it manages to hold 2800, and there is also the key moving average, then again some recovery can be seen towards 3000. So buy on decline with support of 2800 to 3000 can be played in Reliance Industry.
All right. And, what are the picks that you would be, stock picks that you would be working with for today? Given the fact that there is a fair bit of weakness in the market, what would you be keeping on your radar for the next couple of sessions?
So, first trade will be buy on ICICI Bank. As I mentioned, that holding well and supporting Bank Nifty Index to inch higher comparatively, because there is not fallen as compared to the weakness in Nifty Index. So here I'll go with buy on decline instance. With support near 1060, one can look for an upside move towards 1120 level. UPL and other chemical names, we have negative setup. It is continuously making weak structure. After the last consolidating move of last 6 weeks, phase breakdown is visible. So with hurdle at 462, one can see the downside move towards 430 in UPL. So ICICI Bank positive, UPL on negative side in this market scenario.
Hold that thought. Before market open, I also want to get in my other guest who's joining me now live. Sandeep Raina, who's the Exec VP Research at Nuvama Professional Clients Group, joining in this morning. Great to have you on the show, Sandeep. Before the markets open, I want to quickly get in your thoughts on what do you really make of the weakness in the broader market. Do you think a deeper correction is, on the anvil, or do you think this is a much needed correction after the breakneck rally that we've seen?
Hi, good morning. So see, it's very difficult to time the market. I don't know whether today is the bottom or maybe after 5 days the bottom will be formed. But what is most important to understand is we have to look for stocks which are reasonably good and have corrected. And there are multiple stocks which have corrected 15 odd percent. Maybe on the large cap side, we have not seen that kind of degrowth in the stock or the stock correction. But in mid cap or maybe small cap, we have seen good amount of corrections. They are reasonably good stocks which have corrected 20-30%. Now, having said that, the basic underline is very simple. Just look for stocks which are where the business is not changing. See, this correction is not changing the way business has been run. So business, if we expect it to grow at 20%, it will still grow at 20%. Right? The cash flows were supposed to be strong, it will still be strong. So focus on those stocks which have corrected and the business model is not changing, your EPS is not changing, then go for it.
Right, Sandeep, hold that thought. I'll come back to you, and we'll talk about specific, sectors and stocks as well. But let's take a look at what the markets are doing. Of course, we have opened week today as well. The Nifty is below that 21,950 mark, around about that level at the current juncture. If you look at the mid-cap end of the markets, another 1% cut coming in there. I also want to take a look at the small-cap index, how that's faring, because yesterday we saw a 5% downtick on the small cap index, another 1% cut coming in. So not a very deep cut coming in, but the texture remains on the weaker side. Let's also pull up some of the sectors. The Nifty Bank index is down 0.5%. Let's pull up the realty pack. The realty index has been on a in a downward trend in the last couple of sessions. It has lost somewhere around 7 to 8%. Today, it's down somewhere around 2% or thereabouts. Looking at the metal pack as well, yesterday that sector lost somewhere around 6%. IT is down just about marginally in the negative zone. Metals are down another 0.5%. And if you look at some of the movers, on the downside, Bajaj Finance, that's the top Nifty loser. Bajaj Auto, life insurance names like HDFC Life, SBI Life, even the metal names, as I was mentioning yesterday, that was among the top losers on, sectorally. So Tata Steel, JSW Steel, all these metal names under pressure. You have Dr. Reddy's, Tech Mahindra, Titan, all of these stocks under pressure. But let's also pull up a Reliance Industries and see how it's doing in today's session. Of course, there is news flow that it will be buying out 13% stake in Viacom, 18% from Paramount. So, of course, Reliance in the green, 0.8% kind of gain coming in there. So, on the upside, and other stocks that are doing well today are Coal India. That this stock was down 7.5% yesterday. Today, it has seen some bit of rebound. So, that's why Coal India, of course, 2% up. Hindalco, BPCL, Hero Moto, aside of Reliance Industries, Infosys, Sun Pharma, M&M, HCL Tech. So some bit of buying coming in some of the IT names. But, let's also pull up the CPSC ETF index and see how the PSU pack is really doing. Stocks like RVNL, BEL, BDL, these stocks are some things, some of the stocks that saw some bit of pressure from, all-time highs. Let's see how some of these PSU names are doing in today's session. We'll come back to that, but Sandeep is waiting by. Sandeep, let's talk about the PSU pack in particular, right? I mean, I was just reading your Nuvama note yesterday. Mutual funds have exited some of the PSU names completely, right? Do you think this is a much needed correction that the PSU stocks warranted? Or do you think, that was a rally that was largely, driven by euphoria, especially from retail investors and not backed by fundamentals? How would you look at the PSU pack going forward now?
So firstly, I would just like to add, it was not backed by any other thing. It was backed hardcore by fundamentals. See, in PSU also, we have to understand what are we picking. If we talk about the PSU in the defense sector like HAL and BDL and other companies like Masdog and all, there is a hardcore fundamental change. There is a growth that we're seeing. The kind of investment government is talking about in defense is phenomenal. The kind of Indianization that will happen in this sector will be phenomenal. So it is not based on just news or something. It's actually hardcore number. But yes, these are lumpy businesses. They will take some time, but actually there will be earning going forward. So PSU we have to categorize. So defense is a great sector in PSU space that we should be looking at. Railways, amazing sector because the kind of investment. See, it's very simple. The way government is talking about the investments in India in the core sectors, that will actually lead all these companies to far better numbers in terms of PAT, in terms of EPS, and in terms of then the valuation will also move up. So those are sectors. In banking also, like SBI and Bob looks interesting. So we have to divide these sectors and then look at company which to buy. I will not be buying any and every PSU. So we have to define those PSU. So these sectors looks interesting, the PSU categories also.
So which is the pocket where you see froth building within the PSU pack? When you say you have to be selective, which is that pocket which you feel one should avoid right now?
See, there are a lot of small banks which have just run up very significantly. I think we should be looking at valuations also. There are a lot of banks which are at 2.5 time booked, because then I'm getting a larger bank also 2.5 time book. So I'll prefer those rather than those smaller PSUs. So that is why we have to categorize based on the valuation, the growth of those PSU companies. So I will not define these companies as PSU, non-PSU. I'll define as core sectors. So for me, the way to look at stock market is based on sectors. It is not private or public, because if there's a growth in the public sector bank or public sector companies or undertaking like BHEL, I mean, there is a hardcore change happening in the business. So why not people will buy BHEL? So it's as simple as that.
Right. And what are your thoughts on the NBFC space, particularly the likes of IFL Finance and JM Financial? Of course, there's been a crackdown there, and we've got a downgrade as well coming in on IFL Finance this morning. Do you think NBFC pocket should be completely avoided at the current juncture?
I think right now, I think NBFC should be avoided in sense, but we should monitor the news flows. And it's not that like Bajaj Finance is looking phenomenal at these valuations, if you ask me. But yes, there are so many news flows happening that we should be generally avoiding and keeping a watch, because there will be a time when we'll be investing in these companies also. But yes, right now, the kind of news flow that we're having, I think it should wait and watch. And it's not important that we catch the falling knife. It's okay. Maybe we'll buy at 10% higher also. I don't know. But I'm saying the important thing is just stay away from these companies right now, but keep a hardcore watch, because these are good businesses. It's just that there are news flows or something is not going in the favor. Just avoid them for the time being.
All right. Any thoughts on Yes Bank? There are reports that it is looking for, looking to sell 51% stake, looking to, at a valuation of $7 to $8 billion or thereabouts. Report based, but do you see that? Do you say that these valuations are a little elevated? What are your thoughts there?
Frankly, I've not worked on this in detail so that I can comment on that. But I would not know. So yeah, on Yes Bank.
Right. Of course, after the block deal in ITC, what are your thoughts there? Would you say that a major overhang has been removed now? And what should be the next key trigger that you would be watching out for ITC in terms of earnings?
See, ITC is a reasonable good stock, but I don't think so with this 3.5% stake that overhang is gone, because there's still a lot of people who have the stake and they would want to buy, but they would want to sell, but there's nothing specific right now. So there's no change in the sense what happened, let's say 30 days back or 40 days back and what is happening today. It's a reasonable stock, and selling, it's not that selling will come at one go. Nothing like that. It's a reasonable stock. Whosoever will sell, they have large chunks, and of course, they'll speak to big buyers and then only the deal will happen. It's not that they will offload everything in the market and the stock will crash. Nothing like that happens actually in big stocks.
All right, Sandeep, with that, I would thank you for taking out time and joining in this morning. Appreciate your, sharing your thoughts with us, but look forward to having a longer conversation with you sometime soon.
Sure. Thank you.
Let's also bring on board, Anshul Saigal, who's a market expert, who's joining in this morning. Anshul, great to have you on the show. Since the last time we spoke, the broader markets have seen a fair bit of correction, right? Would you say that this correction was much needed and it would only separate the men from the boys? Or would you say that, this is the start of a deeper correction and, we could see more, another double-digit kind of correction coming in when it comes to the mid and small cap indices?
Good morning, Nandita. Pleasure to be with you again. We have to understand one thing, that stock prices are very different from the businesses. And if we focus on the businesses, then we get an understanding of where the direction of a business is. And in all likelihood, over the long term, stock prices trace the business direction. In the short term, of course, we've seen that, say, in the last 1 year, it had become very easy to make money. and people were, very quickly making money in quite questionable companies where valuations had gone up quite significantly. And that needed a little bit of a course check, a reality check. And that reality check has clearly come in today, in the last week or so, where people have realized, and the weak hands have realized, that it's not really always hunky-dory in the markets. You can't take leverage bets in small companies and expect that they will keep going up to the moon. There will be corrections midway. And unless you have the conviction to hold on because you understand the business, you will find it very difficult to ride these bouts of volatility. That is what is playing out today. And our assessment is that, to your question, whether this is a long-term correction or a short-term correction, I can tell you that in the last 3 weeks, I've been speaking with companies in varied sectors, ranging from chemicals to manufacturing to IT. And the kind of commentary and the body language that I'm hearing on growth within these various sectors, I think that we are in for a long-term bull market in India. Speed bumps will come along the way, more so in the small and mid-cap category, where liquidity is a concern, as also this category moves up in fits and starts. But that aside, if you're a 5-year, 10-year investor in India, there is a lot of money on the table, and you will get to make that money if you're in quality names over a 5-10 year period.
All right, but for the shorter term, do you think the kind of sell-off that we have witnessed in the broad end of the markets is mainly nervousness ahead of the result of the stress test that comes out tomorrow, or do you think there's pressure, redemption pressure when it comes to mutual funds? What would you pinpoint as a reason behind this sell-off, aside of the valuation froth that, of course, has been pointed out by regulators as well?
Another two things coincided. One is that you saw the small cap index rally more than 60% over the last 12 months. And that is quite a rally, and it was quite a broad-based rally. So you saw many stocks within the broader markets rally so much. And what this coincided with is a lot of regulatory action and regulatory speak. So you've seen the regulator come out and say that there is froth in the markets. The use of the word bubble has also been made. The regulator has nudged industry participants to kind of block the flow of funds into a certain segment of the market. There is also a certain malpractices which have been, those have been revealed in recent times. All of this makes the investor slightly nervous. And clearly there is so much money made over the last 12 months that there is profit booking which is happening in the midst of all this nervousness. And that is leading to the markets being a little volatile at this time. But as I mentioned, the fundamentals of the country remain absolutely robust. Prices have corrected in certain pockets. I think that value has emerged already, because some stocks are down 30-40% in a matter of a week from their recent highs. And again, if you're not looking at the next week, 2 weeks, 1 month, and you're looking at investing for the next 2, 3, 5 years, very difficult to lose money in the Indian markets at this time. Very likely that you will make money from here over the next 3-5 years. I, for one, am not a votary for using the word bubble. I think that we may be frothy in certain pockets, but we are nowhere close to where we were in 2007 towards the end, or during the IT bubble in 2000-2001. So we are far from that at this time, and the fundamentals remain quite robust in the markets.
All right, the fundamentals are robust. Just hold that thought. I'll come back to you, Anshul. But I also want to go back to Chandan, who's waiting by very patiently. Chandan, let's address a couple of viewer queries that are trickling in this morning. I can see a query coming in on Muthoot Finance from Jigar Patel. He wants to know how one should be really trading in this counter, holding out, just about managing to hold out right now. Stock hasn't done all that badly over the last 5 sessions. It's down just about 3%, especially when we've seen what's happening in the broader end of the markets. In that sense, it has done fairly okayish. But do you spot a trade in Muthoot Finance in particular?
It's very tough to find the swing here because already it's moving in a wider range. Couple of days back, it made bottom near 1260, and just 5-6 days back, it made a huge swing towards 1500 back to 1350. So I think let it decline towards 1300 zone. Then only there will be buying opportunity. So I'm waiting for some more declines, and then only one can take with support of 1300 in Muthoot Finance.
Right. Also spotted a query on Yes Bank from Mohit Anand Bhatia. There's news flow that the company is seeking a new promoter and a valuation of $8 to $9 billion. Of course, that's a report-based news. But Yes Bank in particular, how the chart's looking now?
The chart is not much comfortable. It witnessed a good recovery 5-6 weeks back, and then entire momentum wiped out, continuously making low top, low bottom. So suggestion is better to avoid and be with the heavyweights name, where you have margin of safety with some upside. So here we'll avoid.
New India Assurance, that's the other one, and I can spot a query on that as well. Guru Prasad has written in. The stock is holding out today. It's up 1.5%, and but in the last 5 sessions, it has been hammered quite a bit, 15% shaved off. Would you advise buying into this particular stock at these levels?
Ananta, can you name the stock again, please?
New India Assurance.
Okay, so you are talking about New India Assurance.
That's correct.
NIACL. So I believe some sort of recovery could be there. However, structure is weak when we look at the bigger time frame. But buy on decline could be there. I think a bounce could be there towards 235. One can buy on decline with support of 212.
Right, that's the view then. The next query is coming in on an all cargo. Alex wants to know your thoughts on this. Would you advise a fresh entry now? That's what Alex wants to know.
I think let it decline. We recommended earlier near 70 zone, and the stock really done well, headed all the way to 98 something. But it's back to those levels, momentum fizzle out. I think near 60, 62 again, you'll get the good entry because as of now it is making lower top, lower bottom. And that's why we have some more decline in the counter.
Right, hold that thought, Chandan. We'll come back and take a couple of more queries. But let me go back to Anshul then. Anshul, with the kind of crackdown that we've seen on the NBFC space, I was talking to Sandeep earlier about it, and he mentioned that NBFC space should be an avoid at the current juncture. Would you concur with that? We've seen quite a few, banks also taking action, right? You had Federal Bank and South Indian Bank who've said that they won't be onboarding any new customers with respect to co-branded credit cards till they meet RBI norms. So in that sense, NBFC and smaller banks, even smaller PSU banks, should one be a little careful when it comes to these, this pocket?
2-3 aspects to this, Nandita. One is that, of course, this is a period where illiquidity is punished. So if you're in illiquid pockets, whether that is NBFCs, banks, or the regular, businesses or stocks in the market, those will be punished at a time like this. So you've got to be cautious in that regard. The second aspect is that within NBFCs, there is a differentiation being made. One is NBFCs which have a strong parent, mostly in many cases parents who are business houses and which provide credibility to the NBFC. In such cases, these NBFCs are able to attract capital, and that they can go out to grow. But NBFCs which don't have a strong parent and where antecedents are slightly questionable from the past, their capital availability is squeezing for NBFCs, mainly because of regulatory action recently, as also because of price action within the NBFC space. And also, like you rightly mentioned, there are certain banks who are saying that we will restrict the flow of flow of business from these NBFCs. If you look at it in conjunction, you have to make a distinction at this time between NBFCs and go with the stronger, larger ones rather than the the smaller ones where there is questionable business availability for the future. So that's how I would look at the NBFCs. Of course, they're a very important cog in the wheel. They are the last mile that gets the customer to many banks, as also for the financial system in general. So it's not like they're going away, but in the short term, one will have to be slightly cautious given the environment at this time.
Right. When you look at the headline index, Anshul, we aren't way off from record levels, right? So if you say that there is a fire sale happening at this current juncture, of course, largely the view is that stick to large caps at the current juncture. Which are the pockets that one should look at if you look at, rebalancing portfolios? So would you say FMCG, pharma, defensive names are worth a look at the current juncture? Or would you say stick to, IT or, something like all the PSU names that I spoke about? Would you say they also offer value, the larger ones like Coal India and TPC for that matter?
Nandita, we're in a phase today where manufacturing as also capital goods capacity creation in this country is going to see significant tailwinds over the next 5-10 years. We were till recently scratching our heads to understand which manufacturing companies available at reasonable prices because all of them had rallied quite meaningfully. Now, in the last week, manufacturing capital goods companies have corrected anywhere from 25 to 35%. And there isn't any change on the ground as regards their business prospects over the next few years. Now, that creates some amount of attractiveness to these businesses, and that creates some reasonableness to their valuations. And I think that it is for this reason that one should look at this space at this moment with a time horizon of 3-5 years, not with the time horizon of next few months or something. If you are a long-term investor, very hard to go wrong in these spaces. Aside from that, of course, your psyche as an investor will determine where you should be investing. If you are perturbed by a lot of volatility, then of course go to the sectors like FMCG, to some extent large IT companies. But if you want to create long-term wealth in the Indian markets, then I would suggest that this is a space to be, this is a time to be gradually aggressive and look for stocks with a long-term horizon where prospects remain strong and sectors where prospects remain strong. And there are many in India, even defense for that matter. I mean, there again, the way the government is going and the policy action that the government is taking, everyone wanted to jump onto defense till about 3-4 months back. But now that the correction has happened, of course, people will be wary because they will look at tickers and they will say that what if the stock prices go down further? But valuations have become relatively reasonable as compared to where they were 1 or 2 months back. And, on a stock by stock basis, it may make sense to actually look at that space as well.
All right, that's the view then. Anshul, I'm afraid we're running out of time. Would like to thank you for joining us this morning and sharing your thoughts with us. Look forward to having another conversation with you sometime.
It will be my pleasure. Thank you, Nandita.
Thank you. Chandan, coming to you again, we are just about holding on to that 22,000 level. Today, the auto pack is fairly buoyant. It's among the gainers, and so is the metal as well as PSU banking pack. But particularly for Tata Motors, what are the levels you are spotting on the charts?
So some sort of recovery could be there in most of these auto name, and especially if I talk about the Tata Motors, it witnessed a corrective move and now taken supported key zone. So I believe 952 could act as a major support for a bounce to 1,000.
All right. Also, some of these OMCs, they are witnessing buying interest today. There has been an upgrade also on the likes of HPCL and BPCL. But we have a query coming in from Vicky. Alim Chandani, and he wants to know your thoughts on an IOC in particular. Between or among the three, HPBP, IOC, which is the one chart that's standing out for you now?
Yeah, I'll focus on IFC, and exactly we are taking support at key moving averages. 160 is an immediate support, and I believe with this support, you can see a decent bounce towards 180 in IOC, which comes to 5 to 7% from current level. So I think it has turned from key level, and by keeping the strict support of 160, you can place the bounce towards 180 in count.
All right, that's the view on IOC. I hope that answers your query, Vicky. But what does one do with a Suzlon now, Chandan? Vignesh has written in. He wants to know whether it's an accumulate, at 34 levels for a target of 48. Would you advise that? Because the stock has come off quite a bit. I think 20% off in the last 1 month.
So now I'll avoid. Earlier I used to talk about the counter, but already it has seen decent run up. If he's looking to take risk, then definitely he can go for. But what I understand in the market where many mid-cap and small cap has corrected by 15 to 20%, and where we have quality, better to stick to those names rather than finding out value in these names. So we are risky bet is there. So you need to keep the level of 32 as a key support in mind for any kind of trade setup.
All right, last query really for the day. Yagnesh has written in. Of course, lots of queries on the banking names are trickling in this morning, Chandan. Axis Bank, he wants your thoughts on this particular stock. He wants to know whether it's a fresh buy at current levels. Of course, holding on to that 1000 level, would you advise, or would you say that, wait for some bit of more correction before getting in?
So I have positive stance in two counter in banking, including ICICI Bank and Axis Bank. And he needs to understand that ICICI Bank or Axis Bank are comparatively range-bound counter. And recently they have seen some profit booking decline. So buy on decline is the best way. And I think because of the stability of ICICI and Axis Bank, Bank Nifty has not corrected much. So I think near 1050 he can accumulate for an upside move to us 1120 to 1150 marks positionally.
All right, that's the view on Axis Bank and of course ICICI Bank as well. Hope that answers your query. But with that, we've turned, in fact, positive when you look at the mid-cap index, Chandan. Strength coming in there, 0.9% gain. Buying coming in at lower levels. For the mid-cap index in particular, any level in your mind?
So if I look at the Nifty Midcap Index, Nifty Midcap Index has broken its 50-day moving average, which is working well for this index, and that moving average was broken after 92 trading session. And technically speaking, it formed the multiple tops and already seen a decent correction and gone to a key zone. So I believe midcap index once can bounce towards 46,800 kind of level. So that means almost 1.5 to 2% recovery could be there in midcap index before it gets fizzle out. So some sort of recovery may be there in broader market. And Nifty can attempt to 122, midcap index can see some recovery as well.
Right, a sigh of relief, when it comes to the broader markets. We've seen the small cap index also, gaining 1.5% or thereabouts. And Adani Group stocks also have staged a good comeback after yesterday's sell-off. But with that, Chandan, thanks a lot for taking out time and joining in this morning and sharing your thoughts. And of course, addressing all of your queries so patiently as well. Wish you a very happy trading day.
Thank you.
Well, on that note then, of course, not doing all that badly right now. Nifty is just about in the positive zone, holding on to that 22,000 mark. But the bigger news is that the broader end of the markets has turned, to turn the corner for now. It's in the green, mid and small cap indices up 1.5% or thereabouts. So of course, it's a crucial stress test result that the market will be watching out for. That's due tomorrow. But for now, some buying emerging after the drubbing that we've seen in the broad end of the markets. But with that, we are completely timed out on this edition of opening bell. Of course, we have a new listing coming up at 10 o'clock. Gopal Snacks. The debut is likely to be fairly muted because of the negative sentiment in the broader end of the markets. It saw a good 9 times kind of subscription for its IPO, and expected to see a mild listing. 10 o'clock is when it lists, so watch out for that as well. All right then, with that, it's a good bye from me and the entire team. Thanks a lot for tuning in to Opening Bell. Stay tuned to Money Control for all your other news and updates.